Welcome back. As promised, let's get that conversation going with Rohit Srivastava of Indiacharts.com. Rohit, thank you for joining in. Good talking to you on a weekend. I guess we're discussing markets this Saturday. So, tell us, it's a good time to kind of sit back and analyze everything that's going on. Now that we've had all this volatility around banks with a couple of the bank earnings, then there's the IT pillar, which provided some support. But when you put it all together, what does it tell you about the market? After the shakeout that we had this week, how do things look and where do we stand?
Not a pretty picture. Of course, we'll get the weekly closing only today based on the charts because, Saturday does get counted into the previous week when we actually plotting data. But having said that, this 3-day decline that we saw last week does look like a trend reversal of sorts. On classic Dow theory, when you stop making higher highs and higher lows, it's a trend reversal. So that is the first thing that has happened. The second is then, are we just looking for a bounce? And if that is true, then typically you will not retrace more than 50 or 60% of what we have, done so far. Now, 50% is already done today at 21,710 odd. 61% is closer to 21,800, which leaves open possibility of maybe another 100 points on the upside. But our sense is that we might not go much beyond that, and possibly the market turns lower from here and then heads back towards a 20,600 kind of level. So that's the view with which we are working right now. The only alternate, I think, could be that given that we have a budget coming up, sometimes the markets may just not fall immediately. They may just remain lackluster till the event itself. Again, something we can't certainly say will happen, but a possibility that we'll have to deal with. But I'm at least not looking at new highs in the market right now.
No new highs, but a extension of the current bounce to levels of 21,800 is certainly possible. Rohit, what about HDFC Bank? That's taken the biggest knock this week. What are the charts telling you?
So HDFC has generally been a underperformer. It's not a stock that we trade actively either because it doesn't. When a stock typically doesn't move, then we sort of lose interest in even trading that stock. So it's been out of radar, but it is a surprise the way everything panned out, simply because you don't expect these kind of wild movements when for quarter to quarter we were seeing some kind of earnings growth. There was a hope actually that things would actually pick up, but that has actually not happened. And now that it's sort of sold off, we might try to think, okay, is it oversold? Is the worst priced in? But like I said, the chart's not a pretty picture. It's like a double or triple top near the level of around, I think, 1710 where it peaked. And if I am very close to, I think, the previous support level, which is at around 1460 or so. If we break that, the risk is that it would then go to the next swing level, which is like 12,040 or 50. So we'll be watching this very closely. Does it really hold on to the low that it made, more than a month back from where it was attempting to rally again, closer to 1460, 1440? That range, if it holds, then there is hope. If that range breaks, then you'd see lower levels. That's how I'll think about it.
Rohit, so, considering that the overall picture for the market is looking a little tentative right now, what is the approach that you would take? And I'm not talking for someone, who's looking at day trading bets over here, but for positional investors or even positional traders, what's the best way forward now?
So for positional traders and investors, I think this is not the right time to be taking an entry, because it's not clear that the correction is over, even though I know overnight US markets have made a new high. But you can get these kind of intermarket divergences in late stages of a rally where, one market makes a higher high, the other does not. Even in the internals of the US market, you can see that in the Russell not making a new high along with the NASDAQ or S&P yesterday in that sense. So similarly, at a global level, Indian markets may have peaked at the recent top. The US may still be making a new high, but doesn't necessarily mean that our market also, goes on and joins it. In fact, we've seen the unwinding process start when you look at positioning. When you look at FI positioning, they had gone long to almost 90,000 contracts. And now that is, down to almost zero. So which means they've given up all their long positions on the index futures. Now the question should be, will they start building on the short side? because the last time the market bottomed, there was a short position of almost 175, 180,000 contracts. And we are far away from there. So I think there's room for a lot more selling to happen. And that is why this is not the entry point for positional traders. The trade, though, might actually be on the short side. So investors will, of course, have to wait for a better price point to be buying. But for traders, there may be a trade on the short side. We've retraced almost 50%, like we discussed earlier, of the Nifty. Max 61% gives me around 100 points risk on the upside, and possibly a downside of 1,000 points from there. So the trade is really, I think, on the sell side of this right now.
Okay, that's interesting to note. And the time frame for this view of yours, Rohit, that markets perhaps are headed lower, they've formed a peak in the near term. Is it just still the budget, or in the next 15 days, or does it hold for a longer period of time?
So I will give it time a little more beyond the budget, because what we are not sure of is sometimes markets can simply remain lackluster till the budget before that sell-off happens. So will the sell-off happen before or after the budget? I think that will be harder to call. Keep time till sometime in February, maybe mid of February, for this to actually play out.
Fair enough. Healthcare is a sector that you like. Why is that?
Well, the pharma sector was one of the underperforming sectors of 21, 22. Even when the market was doing well, it was not participating. So somewhere after that initial COVID rally, you saw a lot of pharma stocks sell off, except for maybe the big ones like a Sun Pharma. But everything else was down, whether you go to Lupin, Wockhardt, Dr. Reddy. And now they are actually starting to pick up. And since we are seeing a pickup in this sector, I think what will actually happen is defensive bets start taking place when the markets weaken, when global macros start, creating certain headwinds. And that defensive buying into pharma, which has sort of been an underowned or undertraded sector for quite a while, can create a outperformance or a rally for pharma stocks. And therefore, I think that's probably the only place I would be willing to take any bets on the long side, that is.
Okay. All right, Rohit, we will leave it on that note then for today. Thank you very much for joining in. Wish you a good rest of the weekend. Thank you for being with us today.